video for you, so like maybe we could like talk over it later. And I'm gonna look at the pictures that I sent you, and I'm just gonna like my notes that I sent you, and I'm gonna look at the steps. I'm gonna do like an example trade for you, like an ideal. This is what it's like. This is what you want to look for every single time. But yeah, whatever. I'm gonna just get started. I don't need to look at the picture. So I'm on the weekly time frame. You're gonna see up here. So each of these is 1 week, so 7 days. Obviously, don't mind like the way I talk. Like I don't want you to think that I'm talking to you like you're dumb or something. But so you have your range high. Let me get this so you can see. All right, so your range high. Then range low. All right, I'm gonna split these up for you. Put this in a box. Do it like this. So you can see. All right, perfect. This is your first step. Find your range high and your range low. You don't need to do all this extra stuff that I did, but I'm just showing you this, like, you know, in the because I'm teaching, you know, for the sake of teaching. This is why I'm doing this. This needs to get straight. Okay. Your key level. You want to look for lows that took highs. So this is a low right here, and this is a high. So I'm gonna go back. Okay, whatever. I'm not gonna do that. Let's just mess it up. So you're not seeing any of this. Let me see. You don't see any of this. This is your most recent high right here. In this time frame, it says June 3rd. This is a high that you're seeing. Creates a low, takes the high. So now this is an important low. This is an important key level that you want. You want to wait for the thick candle that happens before your key level. Let me mark this out. Key levels, the arrow. You want to wait for this to get hit. Because remember, you're not doing anything in this week, and you're not going to do anything in the second week until this gets hit. Nothing happens until your key level gets hit. And pay attention to this low too. We'll mark it out here because this is another important step. Okay, now we go into the 4 hour, and this is why I drew the vertical lines so you can see. I'm gonna just type this out. Candle 1, again, Monday through Friday. I'll copy that. Candle 2 is another set of Monday through Friday. Candle 3, again, another set. Candle 1, candle 2, candle 3. You can trade candle 2 and hold, you know, for a week or longer, or you can trade candle 3 and you're going to hold the least amount of time. Candle 2 will give you the most profit. Candle 3 is like guaranteed because of the behavior that candle 2 will give you. And I'll show you the differences in a second. Actually, I'll just show you right now, since I'm just teaching you. This is a past example. You look at the time, Monday, August 12th. That's so funny. My birthday. That's hilarious. And this is just a random time that I chose. This is the behavior. If you look through the notes that I sent you, this is what it is. We take this key level Oh yeah, I'm gonna show you what happens to this. We take this key level and we close inside our range. So that means that this opposing side right here, this high, the range high, because we closed, because price broke out of this range, closed back inside the range, you know, caused by this key level, you're still not doing anything. You're just waiting. Price has now closed inside the range. So now this is when you go to your lower time frame, right? And you'll see the close. Look. Let's see. All right, so yeah, we're officially closed inside the range. You have your first break, second break. Oh. And this is why I have this right here, because we get an SMT. And an SMT is just, they call it smart money technique. And it sounds like confusing, but it's just, I'll draw a little picture for you. I mean, should I? Yeah, I'll draw a little picture for you. I don't even have to draw the picture because I'm just going to show you. This line right here, you see how it's not taken? Not like it's not even close to this. It is this line, April 19th, 6 p.m. or 6 a.m. This correlating asset, the NASDAQ, you see it? Same price, same time of price right there, 6 a.m. We did take it. That is what an SMT is. We took this low, and right here we didn't. So this is going to stay untouched until this high gets taken. That's why waiting for the close and waiting for this behavior, closing inside the range is just like kind of guarantees this third candle trade, especially on the higher time frame. You see this, how the key level, that's why I put the arrow there. It goes straight into this candle. That's your model 1. Oops. Model 1, visibility, hours. This right here is your model 1. That is your very first entry. So obviously, like I said, you want to wait for the third candle, for the quicker trades. But if you're going to trade the second candle, it's a little bit more risky because, like I said, this is your first entry. It forms, you get in, and you're going to be in some drawdown. So if this is your stop loss, which means, let me just write it here. Stop loss, the amount you're risking. And then your take profit is, your profit. So I'm going to keep that there. That's what the second candle trade will look like. This candle right here that broke out of the range, this is going to be your true market structure shift. You might learn about this in the videos you're watching like about it, but they don't explain it like the way this is explained. True market structure shift. Both of that has formed. You want to get in. I think I talked about it a little bit when I was with you. You want to get in the area that's like right in between there. And again, the second candle is risky because you're going to get, it's slow. It's like lethargic. It's not like, you're not going to get the best trading experience trading this candle. Obviously, because it's all in the higher time frame. If you're on the 4-hour, this is a weekly trade I meant, but if you're on the 4-hour and you're doing like a 4-hour trade or an hourly trade, it's going to be a lot quicker. It's only going to be 4 hours, 4 hours, 4 hours, not Monday through Friday, Monday through Friday, Monday through Friday. That's basically a whole month. So this is that trade. You really want to target like I said, the 1-to-1, 2-to-1. If I show you it here, it's kind of, this candle took out the, the NASDAQ instead. Took out the low, close above, you get in there, you kind of get like a little bit more profit, but it's not worth it. It's not worth it for, the process. Okay, that's candle 2. It formed. We can forget about this thing here, and then let me drag this out. This area in between is where you want to get in for the last candle. Oh, wrong button. Right here, this area in between. You have these things here. Okay. Like I said, let's wait for Tuesday. Monday. Still Monday. Tuesday. So your pre-buy, like your bias for this week of August 11th to August 16th, is going to be like bullish, because you know that because we close inside this range, we're bullish. We want to go up. Price wants to go up to this opposing side because of this sweep of liquidity, Model 1, true market structure shift, and we close inside the range, and the SMT. You want all these things to be present in all of your trades. And again, you still haven't done anything. You're just looking and analyzing and waiting, being patient. Now it's Tuesday. Let's see what Tuesday gives us. You mark again your range high. Range low. And you want this low to get swept, and then we go up from there, and you just hold this trade all the way to the top. I'll go into the 1 hour, see what I see, because I low-key don't know what happens, but let's see if I'm doing it well. Let me get the 50% of this. Perfect. Take the low. This is midnight. You want to get in one break. Let's see. Fed. Model 1. This is going to be a true market structure shift, but this is such a higher time frame trade. What time is it? It's 7:45. I'm going to wait a little bit longer. 8. Make this a little bit more realistic. 8:30. Right here. This is important because we closed above our range for the day. You see, like, look at that. This is after 9 a.m. manipulation. So I'm going to go back on the 5-minute, come back inside, close back over it. All right. So because of this close above the range, this is when we get a lower time frame market structure shift. And again, it doesn't have to make sense yet. It's just, I'm just trying to show you how everything is. And remember, I could have got in there, but it was too early. I'm trying to make this really realistic. Like, I'm not going to be waking up this early. And if I did see this early, I'm not taking it. I would wait for sure after at least 8:30. But because of this close above, we're already bullish on the week. You have all these reasons, all these signals that are telling you that the price is going to go higher. Again, this did form right here, this Model 1. Because just because it's early doesn't mean it wasn't there. So it formed. You have this area in between. I'm not going to bet that this is going to go back into this area. It already, closed above. We came down, came up again. Just do it there. You want to put a safe stop. 33 points. 5.87 RR. No, if you got in here on the lower time frame, I'll show you after actually, so I can show you like how these things are working. Because look, this is Monday. Monday creates a low. Tuesday, yeah, you're gonna find your trade there. What time is it? 9:15. We haven't manipulated yet. There we go. Pump up, and I don't know. Like this is just gonna be it. I think the rest of the time you're waiting, and that's it. I had no idea what happened in this candle. Like this stuff I'm showing you like live. Let me make this a little bit faster. Okay, you get in on Tuesday, 9 in the morning. You did a little bit of analysis, and you're just waiting. Like I don't know when it's gonna hit the profit, but that's all the work. You didn't do any work drawing lines on the chart like a kid. Like you're just drawing. This is like it looks silly. I know it does, but like I just did it in front of you live. Like I had no idea what happened. Like it doesn't happen within the week, but that's pretty close. Like I'm guaranteed. Yeah, they're right there. Hits next Tuesday. Look, you waited not even a full week. You're out by Monday. This is an investment. This is not a day trade. This is a swing trade, an investment where you made 6 times the return. You put in $100 here, you made 587. You put in a $500 into account, you risk 100, you make 587, and like this is all you did. Like I don't know, like it does. Obviously for me, it doesn't seem like a lot. It's just I'm showing you the whole process, and look, it's just right here. You can go back into the video. I said it's gonna create this range. We want to take this low, and then give us our reason